There's a popular saying in investing, never put your eggs in one basket. That in a nutshell is investment diversification. That is, you should never keep your money in just one asset class. Diversifying your investment means spreading your investments across multiple asset classes. In that way, the risk of your investments is spread out. If one asset class fails to deliver, there would be other investments that will continue in growing your money. While it's easy to agree that investment diversification is crucial to sound risk management and investing success, the question some have is how exactly do you do it? Sure, some financial guru can always tell you to invest a certain amount in stocks, bonds, real estate, and even cryptocurrency. But the follow-up question is which stocks exactly, or bonds, or cryptocurrencies should you buy? Not everyone has the time to research which of these asset classes to buy and hold, or sell in favor of buying another asset if need be. Regarding real estate investments, not everyone has the capital to enter and invest in property. Not to mention, knowing which property to buy is also crucial. These types of investments require expertise and experience. But for those who are new to investing, is there a simpler way to achieve investment diversification? The answer is yes, and in this video, we'll show you how you can achieve investment diversification through a pooled mortgage fund. Pooled funds have been increasing in popularity because they provide the benefits of investment diversification while also having a more accessible barrier to entry compared to other investments like real estate. Because pooled funds are passive investments, they are practical investment options for people who are time poor and unable to monitor their portfolio regularly. What is a pooled mortgage fund and what are its benefits? As the name suggests, a pooled mortgage fund pools money from multiple investors, which is then lent out across multiple mortgage loans. At APG, the fund is lent out to different borrowers looking for business finance, and all the loans in APG's portfolio are secured by real estate. Returns are based on the interest rates of the loans in the portfolio, and investors receive them in the form of quarterly distributions. What are some of the benefits when investing in APG's pooled mortgage fund? First, investment diversification. Typically, there are around 30 loans in APG's portfolio, all of which are secured by Australian real estate. This means that APG's pooled mortgage fund provides instant investment diversification because the risk of your investment is spread across multiple loans. If one borrower defaults, the other loans will still be performing and delivering returns for the investors. Moreover, because each loan in the portfolio is secured by property, APG will have means to liquidate the asset to recover the amount lent to a borrower that defaults. Second, passive investment. APG's experienced fund management team is responsible for conducting due diligence, sourcing borrowers, and managing all the loans in the portfolio. Therefore, all the work is done by the fund management team. Investors simply wait for their distributions each quarter, which makes APG's pooled mortgage fund a true, set and forget, passive investment. This option is great for those whose goal is to create an additional income stream without additional work. For investors with longer-term goals, they may opt to reinvest their distributions to compound their interest via the Distribution Reinvestment Plan, or DRP. You may access APG's compound interest calculator to compare regular distributions with compounding interest. Third, lower barrier to entry. Investing in a pooled mortgage fund typically requires less capital compared to other popular investments, such as paying the deposit and stamp duty of an investment property. At APG, the minimum investment for retail investors is $10,000, while the minimum investment for wholesale investors is $25,000. Investors have the option to invest as an individual, joint individual, or as an entity such as a trust, company, or SMSF. If you have any questions regarding APG's pooled mortgage fund, feel free to contact the Investor Relations team at investorrelations@activepropertygroup.com.au or message us via our contact page.